Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin in the resources sector, and iron ore futures have been hovering around $107 a tonne. Yet the share price of the major producers have been moving higher. Thomas Atkinson from FX Evolution notes that BHP and Rio Tinto have benefited from their exposure to other commodities such as copper. So, how is the iron ore pure play Fortescue performing?
And Fortescue has lagged for quite some time, but just recently it started to do a couple of things that are a little bit encouraging, I guess you would say, on the side of the technicals. And one of those has been that we've got a break of a trend line. So the audience will be able to see here, we've got a downward trend line, a series of lower highs and lower lows all the way down. Then we've got a double bottom pattern that's potentially formed here. And we've seen a breakout past that kind of 21 range. Then it's come back and even retested, and I've put an arrow towards that retest of the trend line. This is an encouraging sign in terms of the first steps of a stock or a market finding some recovery. And yeah, in this stage, it looks like FMG is doing that. Also, I guess it's not as reliant on diesel prices due to their movement towards the green side. So that could be also a storyline if things continue.
Turning to the tech sector, and semiconductors have been outperforming on Wall Street, and SaaS stocks have rebounded after a dramatic sell-off prompted by the threat of AI disruption. Thomas Atkinson from FX Evolution looks at how this is playing out locally for Xero.
No one has liked software, and you can see it here when you look at Xero. But whether you look at Xero, whether you look at any of the software companies, including Microsoft in the US, all of them have been in big declines. I think at Microsoft at one point was down 36% from its highs just recently, and you would think that would be usually a bear market for the stock market. So it just shows you how bad software's been hit. But we have started to move into technical support. So we've highlighted a zone down here on things like Xero. I mean, this is what I would call a freight train to the downside. Generally, they take quite a while to form base structure because I always have a saying, to stop a freight train takes a lot of structure, because you really need a huge sentiment shift. That is, that all the people that are really negative on that stock, they start selling out, and then someone sees some opportunity and they start buying. And what we are doing as technical analysts is we're always looking at charts from the psychology of human perspective. Like, is someone seeing something that maybe we don't know about yet? And can we represent that in the charts? So in this case, we have the US market. Things like Microsoft have had, I think the software sector's had the best 5 days. So if you look at all the major sectors, software has actually performed the best over the last 5 days after taking a lower low. We see here Xero also showing some resilience. So I'm looking for a 90 plus break here in terms of technicals, and that will take a low, high, lower low to then a higher high. And that's the first sign of what we call technical recovery. So yeah, things are starting to look a little bit better here for Xero and others.
Well, the oil market remains a focus for investors, with the supply shock still reverberating around the world. Carly Garner from DeCarlyTrading.com looks at the likely scenarios and the assumption that oil prices will continue to rise amid the current crisis.
Most people are assuming that supply shock is a short-term situation. It'll be resolved with time, but the May contract is deliverable, and people that need barrels of oil today or tomorrow or even in the next couple of weeks, they're focused on that May contract, and the volume's already started to thin out. So I'm really worried we get 2020 in reverse, and what that would mean to the price of oil is, even if we're in the topping process now, in the next couple of weeks, we could get a bit of a short squeeze on the front month. I don't think this will happen with the July or September contracts, but on the front month, I think we could easily see 140, 150, something real silly and crazy, unsustainable, and probably unjustified. But sometimes markets do unjustified things when liquidity is low, just like we did in 2020. So if we do see that sort of thing, it would probably just be a blow off top before we head much lower. I actually think oil is probably going to make its way back to $40, $50, maybe even 30. So believe it or not, I still believe that's still on my bingo card. But be careful for the next couple of weeks and stay away from the May contract if you're trying to trade futures. Stick with the Julys or Septembers. It's going to be a much smoother ride.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.